Hello dear students and welcome to the official channel of 24/7 Northeast with me, Shubham sir. In today's video, I'm going to be discussing with you the very basics of bookkeeping and accounting and how to get past the dreaded fear of the concepts of debit and credit. So if you are someone who has always found it difficult to get your bearings when it comes to debit and credit, to wrap your head around the concept of debit, credit, and when it comes to the concepts of bookkeeping, or the double entry system of accounting, then this particular session is going to be really helpful because I'm going to simplify these concepts for you, and I'm going to assure you here right at the get-go that this video is going to make sure that you have these concepts clear, not just for the exam, but for the rest of your life. So let us get started. I would want you all to be able to access all of these free material, free study material that other 24/7 Northeast have provided for you. And for that, I would need you to download and install the other 24/7 app. So the link for the app has been provided in the description box below the video. You can click on it, download it, install it, and go and explore the app and make full use of these free resources. So let's come to the topic at hand today, students. We need to first understand what the concept of bookkeeping is and what the concept of accounting is, and we need to understand where the difference lies between these two. So I would want you all to just take a look at the screen here once and follow along as I read this out for you. So bookkeeping, it is the process of identifying and recording transactions and other financial events affecting an enterprise in a systematic way. Transactions refer to the trading activities of buying and selling that every business needs to record. A financial event could be any change in the value of a business, such as theft or damage to property, that also needs to be recorded. So see, students, when it comes to maintaining accounts in a business, in any kind of enterprise that is going through transactions, and this is a very important word, transactions. Everything that we are going to do in accounting has to do with transactions. So we need to understand that whenever there is a transaction, there is an exchange of the items that we will study in a little while, there needs to be some kind of record for it. We need to have a chronological, systematic record for it. And the first step to that is bookkeeping. You see bookkeeping in various ways. You see the most basic form of bookkeeping that we see is when you go to a store and you purchase something. Say, for example, you purchase basic groceries from a store and you see that the store owner has written down a note that this is the amount that I have sold just now. Right? These are the items and this is the total amount that has been sold right now. It's a basic form of bookkeeping. That is bookkeeping in practice. So what is accounting then? How does it differ from basic bookkeeping? So accounting is a broader term than bookkeeping. It refers to the process of classifying, interpreting, summarizing, and reporting on transactions and other financial events. This is done in order to generate useful information from the many different types of purchases and sales that are individually recorded by bookkeepers. So take the example of the store owner that I just told you. You see that every time you go and purchase something from the store owner, you see that the store owner, he or she makes a note of it. But just from those notes, would you be able to take a glance at those records and be able to estimate whether the business, whether the store is being profitable or whether is it going towards loss? It won't be possible. At least it won't be easy or convenient. It might be possible, it won't be convenient. So how do you make it convenient for somebody who's going to use that information that has been recorded? And if that person wants to make an estimate about the profitability of the business, let's say, how do you make it useful? How do you make that information useful for such a user of such information? You would need to go from the stage of bookkeeping to accounting then. And what do we do when it comes to accounting? We try to classify and use information in such a way that it can be interpreted by the final user of the information in a very systematic, coherent, and productive manner. So when it comes to accounting, there are a few key questions that we are trying to answer. What are these questions? Let us take a look at those as well. So when it comes to accounting and when it comes to the users of financial information, whether those users are from within the organization, from let's say the managers or the board of directors, or maybe they are from outside the organization. Let's say, for example, public investors, right? Let's say the company is listed in the stock market and people want to invest in that company. They would want to know about the financial health of the company, right? So they would be looking for information about the company's finances, and they would be outside users of information about the company's finances, right? So users of information could be both from inside and outside the organization. And we all want certain answers from the accountants, and the most important questions are these 4 questions. So let's take a look at these questions so we understand why are we even going into the process of accounting, right? We can just stop at bookkeeping. Why delve into accounting? Because we want to understand, number 1, what does an enterprise own? That means we want to understand what are the assets of an enterprise. All right, this is an important word, assets. Number 2, we want to know what does an enterprise owe? That is, what does it need to pay off? That is, what are its liabilities? Again, another important word, liabilities. That means, what is the company, say for example, the company has taken or if any organization has taken a loan, they obviously need to pay it off at some point of time, right? They owe it to somebody else. They owe that money, that amount to somebody else. So it's a liability that they need to pay off. If they own something that helps them generate income, it's an asset. All right, so we classify all the things in a company or in an enterprise on the basis of its role, and we classify them as assets or liabilities. And there are a few other classifications. We'll go into detail about them in a bit. The third question we want to answer is, how did the enterprise perform? That is, what is its profit or loss? Let's say, for example, at the end of the year, you want to know whether the entire set of operations that you carried out in your enterprise, have you been profitable, or did you just break even, or were you at a state of loss? So for that, you need to understand the profit and loss situation of the enterprise, and for that we need accounting. The third very important question is, how did the enterprise obtain and use cash or any other liquid assets? That means anything that can be quickly converted into cash. That is what we call the cash flow. So that is another very important aspect that we want to look into. How did the cash flow into the organization? How did we use it? How did it go out of the organization? So the inflow and outflow of cash, the cash flow. So the state of assets, the state of liabilities, the profit and loss situation, and the cash flow situation. These are 4 very important areas that we want to look into, because without having this information, you cannot carry on your operations year after year and expect to sustain the organization of the company, right? So for that matter, we do need accounting, and all the assets and liabilities of a business are summarized in a primary financial report called the balance sheet. So if you're an accounting student, you definitely have heard about this. So this is ultimately you could say, the primary objective of accounting. We want to create the balance sheet, and of course we also want to create the cash flow statements and other important statements. But the balance sheet is usually what we are going towards when we are recording transactions in accounting. All right. Now, having understood this, let's come to the concept of debit and credit. So we need to understand the language of debit and credit. So for most of you, this is probably where you might be finding an issue in the concepts that you have about accounting. You might be having difficulties grasping the concept of debit and credit. So I want to make it very easy for you today. This is where I want you to really focus and try to understand the concept, because once you understand it in a way that is really simple, or in a way that has been really simplified just for you, like I'm going to do right now, I assure you that you will understand this not just for the exam but for the rest of your life. So let's go into details about debit and credit. So see students, we just understood that when it comes to accounting, we try to classify the different elements that are engaged in a business or in an enterprise, right? So we can classify everything that a business owns, or everything that a business owes to other people, or all the expenses and the income that the business is going to pay off or earn, or all the equity, the capital that the business owns, right? To the basic foundation of setting up a business, the equity, the capital. We can classify all of them into 5 separate categories. We can take all of them and we can classify them. The first one would be assets. So what are assets? Let's understand this. Assets are anything that a business or an enterprise owns that can be used to generate income. Say for example, a business cannot run without, say for example, furniture. So furniture would be assets if that furniture is helping the business operate and it's helping the business directly or indirectly to earn an income. Say for example, you're running an institution, an educational institution where students come in to study, and you are taking fees from the students, and that is your income. And in exchange for the fees, you are imparting education. Now, if the students are going to come sit in a classroom and learn from teachers, can you run such an institution without having tables and desks? You can't. Then those tables and desks are assets to your institution, without which students won't be able to come and sit, and then they won't be paying you the fees for the courses, and then you won't have any operations going on in the education institution. So those are assets. All right. Coming to the next element, that is expenses. So this is another classification. Expenses are, as the name suggests, the expenditures, the expenses that a business has to incur in order to operate and in order to sustain. Say, for example, electricity bill. If your organization is utilizing electricity, obviously at the end of the month, you have to pay the bill, or else electricity will be cut off and you won't be able to operate, right? Say, for example, the organization has some machinery, and then there's some failure of machinery that has occurred, then repairs have to be made. And for repairs, you will have to pay the mechanic, you'll have to pay the company that produced the machine. You have to probably pay them for a service, and you have to incur an expense that way. So there are expenses involved. Then there are also certain other elements, such as, just like there's assets that you own to earn money, you also have liabilities. Say, for example, the business took a loan, a bank loan, then of course that loan has to be paid off, right? So while the loan is active, right, you have incurred a liability, basically. Such an item, such an accounting item that needs to be paid off in the near future. If say, for example, the company has taken a loan for a 5-year term, that means within the next 5 years, the loan has to be paid off. So for that period of 5 years, it's a liability. It's something that you owe to the bank, right? The fourth one, just like there are assets, there are liabilities, and just like there's expenses, there's also revenues. That means, say, for example, the business has produced certain products. Let's say, for example, the business has certain machinery, all right? Food processing machinery, let's take that example. So the business has the asset of a machine, all right? The machine is an asset because it's going to help the business produce food items, and then they will be able to package it and they'll be able to sell it. It'll help them earn income. So the machine is an asset, right? So they have got the machine, they are going to produce food items. To produce the food items, they need to source some raw materials. Let's say, for example, the packaging, the bottles, the labels, right? Those they have to buy from somewhere, they have to purchase that, so they have to make expenses for it. Say, for example, to be able to purchase all of these raw materials in a huge quantity in bulk, they had to take a loan, and the loan has to be paid off within the next 3 years. So the loan is a liability. And once they took the loan, they ran the machine, they incurred the expenses on purchasing some of the raw materials and all of that. They produced the food items, they packaged the food items, and then they were able to sell it. They got some money in exchange for the sales, right? That would be revenue. Now, to establish all of this, to be able to establish the business in the first place, to get the property, to get the warehouse, to get the factory, there had to be some initial investment, right, into the business. That initial investment, you can think of it as the capital. I'm giving you a very, very basic simplified idea so that you can at least absorb the concept of debit and credit in a simplified way before we get into more complex stuff down the line in future videos. So for today, I want you to understand that we classify all the items in a business or an enterprise within these or into these 5 categories: assets, expenses, liabilities, revenue, and capital. And I hope that you have been able to get a basic understanding of what these classifications are based on, right? Now, when it comes to debit and credit, I'll give you a very simple way of remembering this. When we talk about assets and expenses, whenever assets and expenses increase, all right, I'll give this arrow here, which is going up. That means there's an increase Whenever there's an increase in assets and expenses, we say that debit has gone up. So asset and expenses can be thought of as debit items. That means whenever they increase, we debit them. I'll show you what this means in a bit, but just try to absorb this information. Whenever assets and expenses, these kind of items that can be classified, those kind of items that can be classified as assets and expenses, whenever their amount goes up, we debit that amount. And when it comes to these items, the rest of them, the liabilities, the revenue, and the capital, whenever these items increase in amount, we credit these items. So these are also called credit items. Liabilities, revenue, and capital, they are also called credit items. This is what you need to understand when it comes to debit and credit. This is the language of debit and credit in accounting. Assets and expenses, they are debit items. Whenever their amount goes up in any transaction, we debit them. And whenever any liability, revenue, or capital item goes up in amount in any given transaction, we credit those items. All right? Did you absorb this much? So far, so good. Can I go to the next step then? Perfect. Let's go forward and we'll understand this even better when we think of it in the double entry system context of accounting. Now, what is the double entry system? This is a system we use in accounting where whenever there is a transaction, and understand, remember, accounting is all about recording transactions and trying to classify the different items involved in a transaction under these 5 separate categories that we just saw: assets, expenses, revenue, liabilities, and capital. So whenever there is a transaction, we record it in such a way in accounting that 2 separate accounting heads or account types are affected. That means whenever there is a transaction, we'll ensure that we record it in such a way that at least 2 separate classes or classifications out of these 5 are affected through the language of debit and credit. So how do we do it? How does this show up in practice? Let's take a basic example. Say, for example, a business made a transaction where it made some purchase in exchange of cash, right? Say, for example, a business bought, let's say, rupees 1,000 worth of let's say stationery, right? Stationery items in cash. All right, so the business basically paid out cash and bought 1,000 rupees of stationery items, paper, pens, whatnot. You can think of it this way, that what happened here? What happened during this transaction? What happened is the business had cash, right? And cash is such an item that any enterprise or any business can use to invest it and earn more money, more cash. So this is which class of item? What do you think cash falls under? Assets, expenses, liabilities, revenue, capital. If cash is such an item that its nature is such that it can be used to earn even more money, it can be used to earn more income, which of these categories does it fall under? It would fall under the category of assets. That means when you have something that can help you earn an income, it comes under the category of assets. And cash is such an item. So cash is an asset-based item, right? And what happened in this particular transaction? The cash that the business had, it was paid out. 1,000 rupees was paid out. It went out of the business's pockets, right? And what came in exchange for that 1,000 rupees? What did the business get in exchange for that 1,000 rupees? In exchange of that 1,000 rupees, it got stationery items. So, what are stationery items then? The business has to purchase stationery items if it wants to operate, right? Stationery items are something that the business needs. Even if it does not want to buy it, it will have to buy it because without it, it's difficult to operate the business, right? So stationery items that the business needs, it's basically an expense that the business has to incur if it wants to keep operating properly. So what happened during this transaction? In this particular transaction that we are talking about, what happened is stationery items, this expense of stationery items was made in exchange of cash, and the amount that was involved was 1,000 rupees. So how can we record this in accounting terms? In accounting, we use the language of debit and credit. We cannot write it as we paid 1000 rupees for stationery in exchange of cash. We cannot write it like this. This is just a transaction in words. But if you want to record it in accounting terms, you will have to use the language of debit and credit. So what do we do here? See, stationery, which is an expense, the amount went up, right? Earlier, there was 1000 rupees less of stationery in the business. Now that it has bought 1000 rupees of stationery, the amount of stationery has gone up. The expense has gone up. And expenses are a debit item. Whenever they increase, we debit it, right? So the expense we have made is stationery. So what I can do is I can write it as stationery DR. DR means debit. All right. And what happened to the cash element? What happened to the cash? Stationery increased in exchange of cash decreasing, right? Earlier, there was 1000 rupees more of cash in the business. Now that we have paid out 1000 rupees in exchange of stationery, the amount of cash in the business has gone down by 1000 rupees. So cash is an asset, right? When assets go up, they are debited. Then by that same logic, there's only two items here, right? Debit and credit. It's like 0 and 1 in a binary system. So if cash, when its amount increases, we debit it. What happens when it goes down? What happens when the amount of cash goes down? That's right. We do the opposite of debit, that is credit. So since cash went down, the amount of cash went down by 1000 rupees, we write it as to cash. So this is how we record it. Stationery debit to cash. This is a very simplified way of me explaining this to you. In a more professional way, I would be writing a stationery account debit to cash account, right? But just for the sake of understanding, just to understand by eliminating everything else and just trying to understand the concept of debit and credit, I want you to understand this, that we record this as stationery debit to cash. And we write the amounts. We write the amount as 1000 rupees of debit for stationery, and by that same amount, cash has been credited by 1000 rupees, right? This is how we record in accounting. This is how debit and credit applies. Stationery, which is an expense, the amount went up during this transaction, right? The amount went higher. Earlier, there was 1000 rupees less of stationery in the business. Now there's 1000 rupees more of stationery. So the expense went up. So we are debiting it because stationery is an expense item. And whenever expense-based items, the amount of such items go up, we debit them. Similarly, within that same transaction, one other account type was affected apart from this expense account. One other type of account was affected, that was the asset account, because cash was paid out in exchange for the stationery during this transaction. And for that reason, we have to check what happens to asset-based items like cash. When they increase in the organization, they are debited. But when they are paid, when cash is paid out, the amount of cash goes down, the asset decreases. But so when it decreases, what happens? Since when assets increase, we debit it. When it decreases, the opposite happens, we credit it. Therefore, we write it as to cash, which means cash has been credited. So you see, when a transaction happened, two different kinds of accounts got affected. One got debited, one got credited. So in all transactions in accounting, we affect at least two separate accounts. At least. There can be more accounts involved, but there will be at least two different kinds of accounts. All right? And this is called the double entry system. And also, the amount that gets involved in any transaction, it's distributed under debit and credit equally. So if 1000 rupees is going to get debited, 1000 rupees is also going to get credited within that same transaction. All right, that's how it goes. So I hope you have a better understanding of the concept of debit and credit now. You understand where this stems from, what debit and credit is, what is debit, what is credit, right? I hope you understand that asset and expense items, whenever their amount goes up, we debit them. Whenever these amounts go down, we credit them. Whenever liabilities, revenue, and capital-based items, they increase in amount, we credit them. And whenever their amounts decrease in any transaction, we debit them in such transactions. This is the basic concept. If you understand this, everything else that we'll be discussing from here on out in the upcoming videos, all of that will be very easy for you to absorb and to understand. So students, I hope in today's short video, I have been able to clarify the concept of debit and credit for you to quite a good extent. especially for those of you who have always been scared of these two concepts of debit and credit. So students, if you have been following this session and you have liked the way that these concepts have been discussed with you, I would encourage you to check out our course for your Sikkim Accounts Clerk and Junior Storekeeper posts. This course is going to guide you through the entire syllabus of this exam, step by step, topic by topic, so that you have a really firm grasp of all the concepts that will be necessary for you to crack this exam, all the question patterns that you need to go through, all the MCQs that you need to go through to be able to crack this exam in one go. All our faculties who are associated with Other 24/7 Northeast, we are all going to be giving our 110% to be able to discuss with you and to teach you all the important and necessary concepts for this exam. So students, if you are looking for a full comprehensive course that will take you through the stages of learning that is necessary to crack this exam, then look no further. You've got your one-stop solution here with this particular batch. So you can check this batch out on our Other 24/7 app. The link of this course has been provided for you in the description box. You will find this batch in both the English and Hindi languages. The medium of discussion will be both the English and Hindi languages. So whichever language you're comfortable with, you will be able to learn in that particular language. So if you want to join this course, just click on the link that has been provided in the description box. You can study the entire information about this batch, everything starting from the study plan to who are the teachers, who are the faculties who are going to be mentoring you, the study plan and everything, all the subjects covered for you guys in this particular course. All of this, you can read the information provided for this batch. And if you make your decision that you're going to join this batch, I would suggest you apply the faculty code here. So when you click on buy now, you will get the option to add a coupon here. So here you can apply the code Y577. This is my faculty code. When you use the faculty code to join any of Other 24/7's courses, you get the best possible price for that particular course. And if there's any additional benefit during the checkout process, you will be able to avail that as well using the faculty codes. So note this down. If you are planning on joining this course, Y577, apply this code. You will get the best possible price on this course. So you can apply this code, and once that's done, you can check out by clicking on buy now. So this course is available on the Other 24/7 app. Make sure you go through the details of this course, and if you want to join this course, use the code Y577. I'll be bringing forward more videos and more classes for you on this platform of Other 24/7 Northeast for the subject of accounting, and I'll make sure that all your doubts and concepts can be cleared through this series of classes. Save the playlist, and also if you like today's video, then make sure that you hit the like button. You can note down the code Y577 if you're looking to join the course, and do share this session with any of your brothers, sisters, or friends who are also planning on preparing and appearing for this particular examination. In the comment section down below, you can type out any queries or any doubts that you have. You can also let me know, did you like the session? Did you have any gripes with the session? And also any queries, any doubts, any concepts that you want cleared when it comes to accounting, let me know in the comments. I'll make sure that your comments are seen and your opinions are heard. If you haven't subscribed to the channel of Other 24/7 Northeast, make sure you are subscribed, and I will see you in the upcoming classes. Take care, all the best, see you soon.